All right, so I'm doing a series here on various market profile and order flow nuances that I want to discuss. Trying to keep it basic, not get into full details of all the technicalities and all that. But I think this is going to be a nice series that will help a lot of traders kind of review certain nuances and aspects of how I trade. I'm going to cover a bit more in detail as well in regards to dome patterns, footprint patterns, and all that. But for this video here, we're going to really cover market profile to start off with. But before I start, I really want to make sure that I reiterate how valuable it is for me, the fact that you guys comment, interact with me through various social media channels. I really would appreciate if you guys could definitely give a thumbs up and also go through my social media accounts here. So I've put them all here, listed them here. Don't ever hesitate to contact me if need be. I'm always willing to help traders and interact to see how, with my experience or with the various traders that I discuss with and have been interacting with, we all kind of create a community and learn from each other. So as a trader, you always have to emphasize the fact that trading is a journey, and we all do have to learn and develop new techniques, and always try to perfect our trading. Well, basically, if we cover a bit here, how I trade, just to give you guys some context, a little bit on myself. I've been doing this since 2006, working in the financial industry. The fact that I work in the financial industry doesn't really make me a very good trader or anything like that. Just the fact that it's a passion to be able to cover different financial instruments and kind of fine tune where I wanted to basically find myself when it comes to all the options that are available: stocks, options, futures, all these derivatives. Which futures are more commodities or indices, gold, and now with Bitcoin and all of crypto, it's another field, and you can also add forex to it. So I've been through pretty much all of those markets, and at the end of the day, it comes to where are you finding an edge personally in your trading, and I needed a way to put a context, because context is really important, and generally it's kind of forgotten amongst technical traders, right? Technical traders always generally look at various channels and techniques and indicators, but at the end of the day, it's always about deciphering what and trying to analyze what the market's going to do. And that's the tricky part of trading, where you need to basically try to trade today's market and not last month's market or the previous set of circumstances that happened on that day. So this was through market profile, auction market theory, which gave me a better structured approach to my trading. Um, I mean, if you really go through the books of Dalton and Steidelmeier, you'll find out that at the end of the day, these guys came up with aspects of putting data together. And if you start visualizing markets in this manner, you're going to have some kind of context to be able to trade off. Okay, if you really want to understand what market profile is all about, you really have to kind of start with these guys and learn or understand the theory. Just before I just continue on that aspect, I want to make sure that it's clear that I don't use every nuance of the market profile in my trading, because I don't believe all of them work, and this is because I've done my homework, I've validated which setups, which aspects and nuances work. So I've listed several aspects. I think I've gone through pretty much all of them here. So at the end of the day, it's about building context. So if we were to ask ourselves, where is the one-time framing? Which references are important? Should I watch another indicator with market profile? Should I use the volume from the New York Stock Exchange? Should I be using the tick volume? Uh, where is the point of control of the day, right? These are basically questions that you always ask yourselves as a profile trader. And are we trading above the point of control, or are we below it? Are we generally coming back to test it? Are we migrating around it? Um, in the books, Delton and Stoudemire go over various shapes, like the P shape, the B shape, and then the D shape, right? Which one is short covering, which one is long liquidation. Um, I think at the end of the day, it's always about understanding what the tempo, the velocity, the volatility of the day is. And, dealt in the books, they generally talk about the competitors, about the other time frame trader, about all the participants of the markets. That's where I think a lot of traders kind of get lost, and they start, building all these ideas around inventory, and getting really really complicated into the real techniques, technicalities. I think the most important thing is to have a structured way of validating where the market is trading, how it's trading. So what we'll do now is we'll cover kind of various aspects of the market profile, and just cover them really in a basic manner. At the end of the day, uh, profiles are always looking at value, right? They want to see, is value dragging the POC? Which one is price moving faster with value? What's the market trying to go? Where's the market trying to go? What's the market trying to do? Um, what has changed compared to the previous day? The value shift, right? How do we use all that, right? At the end of the day, I think it's all about understanding what is value, why does value move, and how important is that, right? Because I don't personally use the value areas in my trading at all. I don't look at them. I think you could have, you know, a way to monitor the market with that, but I don't use the value areas, the value high or the value low of the previous day. For me, it's just about how is it affecting today's market, right? And I kind of cover the details of all that when I do one-on-one coachings with most traders, because there's a lot of the theory within market profile that does not really, in my opinion, help me take decisions when I'm trading. In this series, because I'm going to do other series videos around this, I will cover what really does matter in my trading, where I'm going to cover the concepts, the tools I use, how does order flow come into all this. And I think what's important is to take certain nuances of market profile, understand which ones to use for context. How do we understand where the market wants to target, um, how we could play around with the initial balance, which I'm going to get to. The bell curve distribution, at the end of the day, it is a distribution, and you want to see how market plays around ledges and edges, and let's not forget that our higher time frame as a market profile trader is the 30-minute time frame, right? And I don't go into details of what did A period do, what did B period do, how did C period react versus the B period. At the end of the day, it's all about one-time framing up or down. Where is, you know, the market willing to go? The previous day's high, the previous day's low. These are important references that I keep in my trading, because let's keep it simple, right? The profile reflects auction process, and basically market options up and down until buyers weaken or exhaust, and market auctions down until sellers are weakening and exhausting, right? So again, every aspect and nuance of the market profile, in my opinion, should not be taken rigidly. You could use these aspects to find various trade setups that you could play, and the easiest one would be, I think a lot of traders tell me I only use one to three important trade setups with the market profile, and my day is over. And one could argue that that could be the only thing you trade, and perfect. But again, in my trading, I have various trade setups and trade techniques, or uh, what I want to do is I want to kind of master several of them and to be able to trade around all that. So the main uh, nuance or aspect that some traders use is the initial balance trade, where market wants to break the initial balance either to the downside or the upside, and then it's also that A period going into the B period trade, where they want to see the edges of A. Are we going to break A's high? Are we going to break A's low? And then there's also uh, A to overnight trade, where they'll look at the overnight sessions reference points, the high and low, and where will the market go and touch either the overnight high or the overnight low, or maybe the overnight midpoint, right? So those kind of trades ideas could be the easy, simple way of trading market profile, which, I mean, there's nothing wrong with that. And if you want to trade that way, you could definitely do that, because I have a lot of good trader friends who just do those 2 or 3 setups and call it a day. So again, the market profile is organizing data through a bell-shaped curve, right? And we've got a value area, which is through the market profile, it's through time. So in this area here, we have the blue line, which is the time point of control, which means that the market, through all these series of periods, A, B, C, D, E, and F, and all that, until M, has had a middle of that value area, where this is the time point of control, the price that has been touched the most often throughout the day. Now, you could argue that this will be an inflection point for the next day, or you could say that this is my target that I'm going to use. If I buy around this area, my initial target will be to just come back and test the TPOC, or the time point of control. These are basic profile trades that most profilers will tend to use. The white line I have on this example is a single print, right? So if we look into the single prints, going to get to that example here right away. We're basically using this as an inflection point again, and we're willing to either gauge what the market's doing and how important of a move it has been through the low of A, as the market never came back to touch it, right? So basically, it's when we break the low or the high of a period, and in the next period we've never come back to touch that area. So that's a single print that's given on a market profile view. Other than that, like I said, for the initial balance, first hours high and low. So we've got A and B, and then the B low is basically initial balance low, and then the A high is the initial balance high in this scenario here. So in this scenario, we broke through A's low with a single print, which, as a profile trader, that kind of validates the strength of the market. And obviously, me being more of a footprint and dome and trader, I'm not going to just rely on market profile telling me there's a single print and the market wants to go lower. I'm going to also use the tape and the order flow to basically confirm how strong this market is. But if you just basically trade off market profile this way, this does give you a good clue of how the market is either in range or in trend, because what traders are trying to initiate is a breakdown or a breakout from this initial balance, for that matter. Okay, there's good statistics around this because I know a good ton of traders who kind of hold a lot of statistics around how often the initial balance is broken on both sides, how often the initial balance is broken to the downside, and this year's percentages, last year's percentages, the last 10 years percentages. I have friends who trader friends who really have all these statistics, and it's a reality that I believe it's like 60% of the time where the initial balance is broken on both sides, which sorry, on only one side or the other side. Again, there's a good manner to keep statistics and to kind of have a way to monitor the auction of the market with this. But that again is also something that I don't tend to really use. I think there's edge in using it, but I mean, uh, I'm not saying I will basically trade off that aspect every day coming into the markets. Just one thing around the participants. Long time frame participants, short time frame participants, day time frame traders, other time frame traders. I think we need to kind of put that aside and not really put so much emphasis on that because uh, I tend to see that traders put so much emphasis on, oh, the big boys are not around today, so we're not gonna, we're gonna have to have a ranging market or this or that. I think there's no real edge in trying to validate who we're trading against. At the end of the day, we're all trading against each other because the whole point of trading is to make a profit or to make some gains, right? Um, I think the way I want to explain this is that it's best to really read the flow of the present market that we're trading in front of our eyes. It's kind of pointless trying to figure out what the market will do or what will happen in the market in the next few days or the next few weeks. At the end of the day, it's also, uh, you know, I think it's causes a lot of misinterpretation, and you tend to miss good short-term opportunities that were very obvious when you're trading with footprint or with the dome. Okay, I'm going to get into the footprint and the dome in the future presentations where we'll cover good aspects of how I look and want to see the market when I'm trading it tick by tick, basically. So I know that a lot of traders also use the profile to uh, you know, put them into weeklies, monthly profiles, try to build different time frames within profiles. And at the end of the day, for me, I'm trying to avoid making forecasts, and this kind of affects my biases psychologically. For and this makes you also forget the current market conditions. If this is yesterday's range, we come into a new day and the market opens and it's super volatile. It's one of those days where you've got Fed speakers from 9 a.m. to 12 p.m. and you've got, all kinds of earnings coming up. This here in those conditions or environment will not help me, will not give me any kind of a trade location or any kind of edge in executing what I'm trading. So basically, we really have to make sure that we're, reading the flow of the present market, and um, it's always very easy to get caught by all the nuances around market profile. So basically, I my suggestion to most traders is learn the nuances, learn which ones will work, apply several of them in your trading, and try to keep it simple when it comes to all the little details of a market profile. You don't have to master everything. Understand the techniques, why, how this data is basically put together, and at the end of the day, this will at least give you a good structure in your trading. So again, most of the market profile concepts should not be taken very rigidly. Uh, to maybe just cover the value area nuance once again. At the end of the day, it's a bell shape, right? We've got value area high, value area low. This is through market profile where it's a time point of control, time-based value. Um, it's 70% of the day's most where the business of the day has been conducted, where the most activity occurred. In theory, value area is where it kind of leads to trend, right? If this is today's value area, if tomorrow value area has shifted higher within the theory, we're kind of expecting higher prices. That's the basic theory around value. Again, that's the theory, right? Let's not forget that value area high and value area low, these are arbitrary pivots, right? Like if you had a support number one, support number two, and resistance R1, R2, they're basically calculated within a percentage of days trade, right? Um, okay, there's a statistical basis where you could use the bell shape within the standard deviations, and capturing 68% of the activity means that this is an important area of trade. The thing is, when it comes to execution, that's where I think knowing where value area was throughout the whole day will not really help you in your execution, which is another topic for one of the series that I'm going to do in the future. Uh, Assuming that value has shifted higher, does this mean that the longer time frame players are starting to use are seeing the market going higher? Or if you have overlapping value, these are at the end of the day nuances around the theory that, in my opinion, I don't really want to use or give myself a bias around that. Okay, I like to use the initial balance as a key reference, the opening range, be it the 30-second range or the 5-minute range. These are, basically good areas to just eyeball. Um, you know, where was the open, right? If we open at the high of a previous session, are we opening at the low of a previous session, right at the middle of the session? There's good ways to kind of use that information to either look for a fail breakout above a previous day's high and go back into range. These are little nuances that, within Delton's teachings and his books, you will see various examples and theories around that. But when it comes to levels that could change throughout the day, a value area high or a value area low from a previous day, I think we should kind of not give a lot of value and not put all our interests into a specific uh, arbitrary areas like that. I think at the end of the day, it's better to really look at the day's highs and lows. These references could really give you a good way, and these can also be evaluated through footprint and tape to see how market reacts at these important inflection points. In summary, I use the market profile and volume profile mixture in my trading. Volume profile will also be one of the key elements that I will be discussing in another series. The profile in general gives a good way of validating context and market structure. If you're a trader that lacks context and structure, I think the profile will help a lot in validating where the market may have reversals around one-time framing nuances. The fact that we've got statistics around initial balance, using single prints for various targets, and kind of letting the market pause and then using that as an inflection point to see where do we go from here. Tails, meaning rejection of certain areas, overnight high, overnight range, a previous day's range. These could also give good contextual setups. The M period, that means that it's the last 30 minutes of trade. When we end up making a new low or a new high in M period, go back and see how this could also help you within the way the market trades the next day or even in go backs. At the end of the day, we're all willing to kind of have several trade setups around market profile or volume profile, and it's all about having these playbooks that we could practice the occurrences and really have an edge around how we could trade these consistently, right? I think at the end of the day, this does not mean that you will never have losing trades, but you could definitely create a good playbook of good trade setups where they come up and regularly during the day, during the week, and you could have a consistent trade setup that probably you could take 70-80% of the time and maybe add one or two filters to these trade setups and come up with a playbook that will always kind of repeat itself, and you could monitor how good your entries and executions are within the other aspects of order flow, which we'll cover also within the next videos. I've been through pretty much everything, every kind of strategy that exists in trading. Need be could be an indicator, it could be Ichimoku cloud for some kind of trend. We're all trying to understand what the market's doing. Is it in trend? Is it in range? Do we stay out? Are we in the middle? Try not to fiddle in the middle kind of trading strategies. Elliott waves, understanding where market wants to go. Is it trading in an impulsive manner? Are we in corrective sequences? These are all, various trading methodologies, and I think I've gone through pretty much all of them. I won't say that I master all of them, but I think I've seen enough to tell myself that the ideal way of trading, putting it all together, was through market profile and volume profile. So I think I've concluded that the profile kind of gathers the market data in a clear manner for myself, and in a quick glance, I'm able to understand what the market's doing and what kind of market we have, what's the market structure, and also understanding the auction process of the market that has also given a definitely has helped definitely a lot in my trading. I've helped a lot of traders in the last few years, and I've also been through various groups, trading groups, mentors, where covered a lot of what they see, how they spend time watching markets and developing their trading methodology and understanding their trading style. At the end of the day, we're all individuals and we could all have different understandings of the market, but at the end of the day, we need to understand what works for us and kind of come up with various decision making mechanism to make sure that when we're trading, we don't kind of bring in that monkey that is our brain that generally does weird stuff in our trading. So it's always about assessing risk and understanding what parameters we could put around that. And for me, the best way I've noticed for myself is to record the day's session. Always have um, a market profile chart up and understand what the market is doing, where does it want to go, and to be able to filter out, what all the technical and technical traders are doing and how your edge is developed through market profile. So I use Sierra charts when it comes to market profile. I easily have these chart books, create them, understand where the high is, where the low is, why did the market stop right at this level. It's because it's a target and a single print that comes from a previous day. noticing how the market spent a lot of time trying to break the overnight high. We generally rejected it once or twice today, this day, which is October 18th. These are always the kind of nuances that we're looking for as market profile traders. So I hope this was a good introduction to this series, and please do give me feedback. And again, always wanting to emphasize that social media accounts that I have, just make sure to go in, validate, and if you do need to contact me, don't hesitate. So I hope this helps, and please do hit the subscribe button, also the thumbs up. That does definitely motivate me and help me within developing other courses and videos that could definitely help traders. So thank you very much for your support. Hope this does help. Have a nice day.